So always real estate looks good on paper. So some broker presents something to me, it's going to look wonderful. Some syndicator raising capital for an apartment building is going to make the numbers look amazing. So I don't really look at what they present. I just go and I say, well, give me the numbers. So let's talk about specific type of asset I like single tenant retail. Those are the standalone buildings that have a Starbucks, a Jack in the Box, etc. Believe it or not, I like them vacant. I like these buildings vacant because all I have to look for is what the potential is to rent this property, how much will it bring? So a property sitting vacant, maybe at 800,000, I can tell the seller or the broker, listen, it's sitting vacant, you're hoping for a big tenant to come in, I need to buy it from you, the 800 is not realistic based on what I'm gonna collect in rent, what I have to fix in the building, etc. So it's property location in that market and property condition that I have to do to get it to its highest and best use. And if they tell me, okay, I'll go to 700,000. So now I lock it under contract for 700,000 based on a 45-day contract and 15 days to close. I close all cash. I do the deal cash, then I go get a loan. And what I do is I look at the comparable rents in the area based on per square foot rent. And I see that, let's say, a Starbucks down the road is paying X and Jack in the Box down the road is paying Y. And I start smiling and dialing, calling the big tenants to come in and take the place. And I quote them, let's say $8,300 a month. All I need is one tenant to call me back, national tenants. And they will come in, these guys come in for a 10-year to 15-year lease. They're gonna tell me we're gonna sign triple net. That means it's net of tax, insurance and maintenance. Very easy to figure out what the insurance is gonna be. You call an insurance broker, property tax, the broker will tell you the selling the property. And now I have a property that's gonna make 100,000 a year, or 80,000 a year, or 70,000 a year. Whatever it's gonna make, the formula is that amount times 16 will be the value of the property. It's a very simple formula, 6% cap. Why? Comes with a corporate guarantee, triple net, etc. So I can take a property at 700,000 under contract. I only buy it if a large tenant is gonna commit to buying it. And I know how to package them, how to present them, how to talk to the tenants, how to promote them. And if I can't find a tenant, I just walk away with no risk. So that's the essence of the cash flow. People get so confused, they don't know what to buy, they don't know what to do, they don't know, they're looking for certainty. I like the confusion, I like the problem. I'm buying from a person who wants to sell because there is no cash flow. So they have a cash flow problem, I'm gonna have a cash flow solution with a big national tenant publicly traded like a Subway or somebody coming in that's gonna give me a corporate guarantee. I guarantee you I'll pay you 80,000 a year or 100,000 a year. So easy to calculate the numbers. Now compare that to somebody trying to figure out an apartment building. Good luck, good luck. So that's what I do. It's simpler formula.
And you're able to, where the existing owner was not able to get a large tenant, you're able to do that.
Yes, it's a very niche market. In commercial real estate, a lot of owners don't know much. They bought through a broker, they rent through a broker, they sell through a broker. They don't have training. They just had some money in something and they put it in. So it's actually a wide open field. Up to just maybe a decade and a half ago, there wasn't even a multiple listing service. It was LoopNet and whatever other sites you can find. And it's a good old boys club. Even people that are from residential trying to get into commercial brokering, they have a hard time. Female trying to get into that world have a hard time. It's an incredible opportunity that will probably continue for the next 50 years.
And I think, even to buy your first property, tremendous high barrier to entry. Even like you're saying, not a lot of people have 700,000, right, to buy that first property, right? You gotta, yes, right? I mean,
yes, but yes. Anybody, sorry to interrupt, I get too excited. But anybody can set up a real estate syndication or real estate fund and they group investors together. I mean, who wouldn't want to own a McDonald's? Okay, get 20 people want to own a McDonald's. Each one of them will put $25,000 or $50,000. You got yourself $1 million to $2 million. You can put it, purchase a property all cash. McDonald's comes in, the property is a time and a half what you paid. Everybody benefits. And now you're the guru who set it up, but you only had $25,000 to begin with.